Okay, today is March 26, 2014. Well, another down day. So it seems like we've been getting these up, down type of day. And if you're a day trader, that's certainly, well, it could be good and it could be bad. Because the good thing is there's a lot of volatility. So if you're a good day trader, then you should be able to make some money. But if you don't have a plan, then it could be frustrating because you're just going to get whipsaw back and forth as the market just kind of gyrate up and down. But if you're a swing trader, then don't let these daily fluctuation or even try to guess these day-to-day type of movement. Just look at the bigger picture, and remind yourself the trend that you believe the market is in as you see it. Okay, right now, yeah, it's kind of get a little shaky, but the thing is, I believe the market is still, in the uptrend. It hasn't topped yet, in the sense of, the Dow 30 top, because you have to remember, maybe the S&P and the Nasdaq and the Russell 2000, maybe they have seen the top, but you got to remember as the smart money transfer, their little junk to the less sophisticated, which we call the retail investor. Well, and those are the people what we call the Main Street guys. And to Main Street, they're still looking at the Dow Jones Industrial. They don't relate that much to the S&P 500. So the Dow is always the last indexes, the index to top out and to generate that euphoric interest from Main Street to come in and buy the market as the market is already dipping. So they see it as a bargain. It's a good time to get in as the smart money is selling off a lot of these speculative stock and moving their money into more stable and high quality, the blue chip stock, such as some of the component inside the Dow 30 that I have mentioned in the last couple of video. We're going to like the IBM, like the Caterpillar, the 3M, and those guys. Those are very stable quality stock, and it's not for speculative. So that's where the money will shift, and as we call that flight to safety. Then it go to into those type of stock as the money is taking out of these high flyer, like I'm not saying that Amazon and Netflix is a bad company, but the valuation is outrageous. So they know, these smart money know they have pumped it up and they're going to extract it out and then and then transfer those shares to the less sophisticated and let them feel that they are buying at a bargain price. And at the end, those are the people that will probably holding the bag. So we might be at that phase. I'm not saying that we are, but we have to be kind of be aware of that possibility. And you see that. Right? So that's why we still need to see that little euphoric, or what I call the climax, phase of the market, that we just get people just kind of rush in and just like buy the train is leaving the station. If they don't get on now, they're going to miss that train. So we haven't seen that yet. And when the market top, we will see that type of a reaction before the market will top, and that's basically what we're looking for. Now, we might not see it in the near future, because then that just tell us that maybe we just have a little bit of a correction, and this extended, what people call a bull market, might not be coming to an end yet. We don't know that. Right? So what we only could do is watch the price action and watch where the money's shifting. Okay? We've seen rotation of sectors. Okay, so when we talk about rotation, we're talking about sector to sector. But when we talk about shifting, we see different categories stock, like growth stock, speculative stock, to quality stock, the stable, the value stock. So those are the shift, because there are within the value we could have technology, we could have pharmaceutical, we could have energy. So it's not one particular sector, but it's a category. That's where we shift. But if we rotate, then we go from energy to pharmaceutical to consumer stable and so forth and so forth. So that is the rotation. Okay, so we got to understand that distinct difference between shifting and rotation. And right now, what I see is a shift. Now, I could be wrong, but what I see is some sort of shifting going on. So you got to be aware of that possibility. Now, maybe just people just getting a little bit too cautious, just getting too paranoid, but you never know, right? So I would rather, see what the market doing than what I, think the market should be doing. right? Because I don't trade against myself, I trade against the market. So I have to know what the heck the market is doing and go along with it, right? So with that said, let's go and take a look at the S&P 500. Right? The S&P 500, we talked about that this level, that's 1840, 48, 1850 level here, right? This particular level here is basically we're looking for the possible support. Right? So it's kind of still holding that. And if it can't hold that support, we basically saying, yeah, you have to hold this particular. Remember that Monday, right? That Monday after the weekend where Russia sent in some troops into Ukraine, right? That's that Monday sell-off. That's the low, right? We have to hold above that low. If it's not, then there's a good chance that we might be coming down here and test this particular level down here about 1810. If we are there, on this trend line here, it's possibly, it might get down to this area and then kind of break down the 1800 level. But we'll look at that a little bit more closely when we break this support. But for now, we basically want to see can it hold the support, because right now we haven't even broken down that 1849, 1848. Okay, so we're still looking for this thing to maybe chop around and come back up. Remember now, this that the quarterly ending coming soon, so we might have the little window dressing going on also too, or it's going to be coming over. And if I were the guy to be in charge of writing that cover letter, right, about how we did in the quarter and that kind of stuff. You look at some of the high flyer like the Netflix and some of the bio tech that have been sold off and that sort of thing. If I were going to do that, I would certainly, write it in such a way that, yeah, we were investing on those and we have taken profit on there and lighten up on the low on all these, biotech and that kind of stuff. And now we see that, being a little bit more defensive, we shift some of the money into these high quality, high value stocks such as IBM, Coca-Cola, Caterpillar and those things, right? I mean, that's how I would, kind of frame that picture. And if I have that, my portfolio manager and get my trader to situate that portfolio in such a picture, in that picture, then I could, write a little story around it, right? And then tell the story that I want to tell, and then make me look like a genius. I'm no genius, but hey, just like a lawyer, when you go talk to a lawyer, they pull down the shade and they say, well, what do you want it to be? I mean, it's all dependent about how you frame that picture, right? So that's what we're looking at right now. So that's a possibility of window dressing, and we might see a little bit more of selling on all these biotech, all these speculative stock that have been running up, tremendously since the beginning of the year, and then they're shifting these, to a little bit more of a defensive stock, like some of the stock in the Dow Jones 30. Okay, so essentially that's what we're looking at for the S&P 500. Is that 1850, 1848 is the initial support. So we want to see if it can hold that support. If it's not, then we essentially want to see this. This level down here, this low here, which is somewhere around 1834, 1835. Okay, so that's the near future, the support. Now that could completely change if we just get a dramatic sell-off tomorrow and just dive down. Then there's a good possibility it could. What we want to see is at least hold this level 1794, 1795. Right? But really, we like to see it hold this pivot here, which is 1820 somewhere, 1818, 1820. Okay. Then on the Dow Jones 30, again, we're basically still looking for Dow Jones 30 to make a new all-time high, at least get above this level here, which is the closing basis, which is 16,576.66. So I mean, it got kind of contested a couple times, when it got up here. On an intraday basis, but just can close the above that. So right now it's kind of pulling back and still kind of chopping around here. Once again, we're basically looking for this low here, this Monday, that low on that Monday, as a support, which is somewhere around the 16,168. Okay, so we're looking for that. Right now we're essentially in the near term, we're looking at this particular pivot low here, which seems to be hovering around this particular level right now. So we'll see how it hold up, because you also got that 20 EMA and a 50-day moving average down here. So these could act as a temporary support, and when it get down to this, close to this 618 Fibonacci retracement, which is also sitting right near this low here on this Monday low. So we're looking at a closing basis here, right? This swing on a close to close. Okay. Then on the Nasdaq 100, the Nasdaq 100, we know that's been selling off because of Netflix, Amazon, the Priceline, Twitter, Tesla and Facebook and those guys. That did not help. And also, you got the Celgene, those guys. Some of the biotech within the Nasdaq. So although the Nasdaq 100 is more heavily weighted into the tech, but you could see that it is coming down, and right now it's tagging this 50% retracement on this Fibonacci retracement here. Okay, and we're essentially looking at the possibility of maybe getting down to this 3,500, 3,550 if we continue to come down. Essentially this little pivot point here, and we're talking about here on this this particular pivot. See if it could hold that. Because if it's not, then we'll probably be looking at to maybe possibly come back down to somewhere around this 3420 area. So, but right now we're still looking at the possibility of holding up and getting a bounce here. Possibly might consolidate for a little while up here. Okay, before it gather enough momentum and try to make a run at it. So we'll see how it hold up and how it's going to participate on the next time when the market turn, because there are a lot of tech stock kind of been too fluffy and right now being sold off. So and then on the Russell 2000, you see the Russell 2000, we're looking for this particular level to hold as a support. Okay, you can see that it's already broken down, and then we were looking for this particular pivot here for the support, and also that been taken out today. So now essentially we're looking at this this level down here. So essentially somewhere around this this area here, at this little pivot. So it's near the 50% retracement on this Fibonacci. So and it's getting pretty close to that right now. So we're talking about maybe 1150. Okay. Today is closed at 1155. So I wouldn't be surprised to see it come down and penetrate that before it maybe see a bounce. Then the other area is maybe possibly down here at the 1140 area on this particular pivot. Okay, so these are the two support areas that we gotta have to keep an eye on to see if the small cap be able to hold support if it doesn't bounce back and get back above the 50-day moving average and possibly get back up about this particular level here at that 1174, 1175, that area. Okay, so and look at IBM. IBM. We're talking about breaking out of this trend line here yesterday, and it has a heck of a break. And I believe it went up about 6% or something like that. I'm not sure. So it's a pretty good percentage yesterday. I'm not in that trade. I'm waiting for it to come back down and retest it, because with that, if I'm in that trade, I would have taken profit yesterday already, or at least scaled out some, because running that much, the old saying, if you're not going to take profit, somebody else will. So basically waiting for this thing to try to consolidate down here and look for a little bit more favorable reward and risk ratio for entry. And if I don't get in, I don't get in. Just look for something else. I mean, because you look at this, I was also talking about, the resistance here, that essentially it was tagging that resistance yesterday. Right? So that's kind of, put a little damper on the ability to continue to move up, even though if it breaks through that resistance, the likelihood is it probably come back down and retest it anyway in the coming days. So just have to be patient at some of these times. When you sit on the sideline, you see something move like that, you feel like you're missing out or something like that. But a lot of time, it turned out much better than your initial feelings tell you. So just be patient. And if you miss it, you miss it. There's always opportunity in the market. And then also on 3M, we're still waiting for this thing to break about this 134.75 area. So if it break, then we're basically looking for it to come back up. Still holding within this little bit ascending triangle here. So just keep an eye on it, and if still holding above this particular trend line. And the moving average, we see that 50-day moving average could be turning up, and the MACD is a little positive. So you can see that, again, Caterpillar, broke out of that baseline here yesterday and then kind of pulled back today. So that's not unreasonable to expect. So we just have to see how it tests this particular level in the coming days, and then just wait for the next breakout and see what the price action is. And if it's more on that favorable entry, then take that as a trigger and maybe go in on some Caterpillar. Similarly on Coke, Coca-Cola is still trying to break this little wedge here, this basically this baseline, and then so we kind of keeping an eye on this guy somewhere around this $39 level, and if we break through that, then maybe we could get it probably encounter a little resistance on the 200-day moving average, and then work itself back up, and possibly get up to a 52-week high up here at this 41 and change. And then also looking at Intel, again, we're basically looking for Intel. Well, it booked this particular trading band, so and then we, like a little flag, and you do a major move, then it's pretty much it had met the major move target. So now we're basically looking forward to possibly break into this area, the 2580 plus, to get into fill in this gap and possibly come up and try to take out this high here at the 27 level. Okay, so then a favorite Apple today, kind of gyrated a little bit, but Apple's still holding good, even though we gave back a little bit, got this outside day here, but it does, essentially it booked at 539, and it was holding that 539. I mean this 537, so it was holding this 539, 540 area. So, and right now it's just, kind of consolidated a little bit, and, it got closer to this 551. So if we could get above this 551, then we will see it, run up, and a lot of the chaser will come in and try to chase this one up. So because, they know that this is a little bit of a breakout, but right now they, doesn't take this too much of a credence of this particular break. So they're going to wait for this breakout here. Once you break out this baseline, I think you're going to see some chaser coming in and chase this guy in. And then we have, the Facebook that everybody want to buy Facebook. We see that a little bit of a head and shoulder pattern here. Right? And then we have this major move. And essentially today, it's kind of got that in the major move in. Pretty close, near that's, this area somewhere around the 60. So because if I use my Fibonacci retracement tool, and because if I want to do this 100%, basically this is 100%. So if I measure it down to 200%, which is this line here, okay, then essentially that would be my major move. So that would be somewhere around that $62 level, somewhere around there. So essentially we got that major move plus a little bit more, and it came down to this particular trend line on this 60-50. So we'll see how it hold up, because we're expecting something of this this guy to hold somewhere up here, near this little cluster of prices here. But if we can't, then essentially we're looking forward to hold this pivot here, this pivot low, because sometimes you have to, again, I said, just plot the close, and then you can see a lot of these pivot, and this is one of the pivot that we were talking about. So, oops, this pivot here. Okay, so right now it's holding this trend line. So we got to see how this trend line hold up. If it doesn't bounce tomorrow, then we'll probably come down and test this particular level here. So that would be somewhere around this 59 area. Okay, and even though if we bounce, we might be bouncing back up here to this 618, and then maybe we will break down and come back down and test this 53 level somewhere. Okay, so it's all depend. If it bounces and it start giving us a little bit of zigzag up, then we replace change the placement of our Fibonacci retracement and see how could that help us on looking at some of the possible support and resistance level. Okay. And then on Twitter, been talking about Twitter for quite a while, then I stopped talking about it because I know a lot of people is looking for, long entry, and I don't have a long entry to tell them. So, but the thing is, you could see miles away, when we were looking at these candle, and when they all finish near the open, just cannot get above it, and there's a lot of selling pressure, and still a lot of people are still looking for a reversal to maybe possibly paying back up, to this level here, and even some people were looking for, it to go back up to 75. Yeah, maybe at the end of the year or something, but we have to finish up this downtrend first before we could talk about, going back up. We have to see what the current trend is and let the current trend play out. Then we have to wait for it to reverse, and then we have to see, can it take out some of the resistance, and then we could talk about 75. It's just like grabbing something behind what and say, here, it's going to be $200 in 2 years from now. Yeah, you can make that projection, but based on what, right? So we just have to be a little patient. We're not trying to be here to say, to claim that I caught it first. Who cares? We're here to make money. Okay, so let's be realistic. Although a lot of people is trying to catch this guy to maybe get long, if it get back up here, but that day didn't materialize. Instead, it came down. So right now we're essentially looking for it to come down, and I thought it might get a little bounce here, and it did on this 127. So I'm essentially looking at this level here as a next potential support, okay, which would be somewhere around that 44 area. And if it can't get down, get a little bounce here, then maybe we're talking about maybe getting down to this 40 area, essentially these particular pivot level here. So because that's basically what I'm looking at on Twitter, and I think there's a good possibility that it will come down and test the IPO low. Okay. And then on Tesla, we're looking for that to hold up here, so won't be filling the gap. But once it booked, then now it came in and filled that gap, and so right now we're basically looking for it to maybe possibly get down here and fill this little gap here. Although we got the 50-day moving average here, might be get a little bounce here when it touches, but believe still probably a little bit more downside to go, and possibly maybe get down to the 50, overshoot this little gap fill, at the 50%, and then we maybe get a little bounce and then continue to come down and possibly get down to this 200-day moving average, essentially this trend line here on this price channel. So that's one scenario. Or, you never know. It could just bounce back and it start reverse to fill and take out this high. If the market all of a sudden it just, shoot up a couple thousand points or something like that, who knows? Right? Anything is possible. So essentially, that is what I got for today, and hopefully, you didn't get, too beaten up in the last couple of days or so far this week. Just be patient. You don't have to trade every day, especially right now. Unless you're doing some day trading, uh, you know, just trade what you feel comfortable with. If you're long, just wait for the long. And if the day trading, the opportunity come along for you to short, then go short. And if it come along to go long, then go long. But on a swing basis, you have to define your trend and then swing with that trend. So unless you see a trend that tell you that it is going down, then you look for the short and try to short it on the way down, right? But and if you're long, you try to swing long and you don't see anything, then just move to the sideline and sit on your hand and be patient, right? Because we don't have to trade every day. It's better not to trade than go and make some stupid trade and lose some money, right? Okay, so good luck to you.